Are you watching this market? It's a real edge-of-your-seat thriller. Every headline, every tweet, every tick matters more than ever. The S&P 500 and Nasdaq are hitting all-time highs, but beneath the surface, anxiety is everywhere. Strong corporate earnings and tamed inflation fuel optimism, but nearly half of Americans fear an economic slowdown. People see record stock prices, but their wallets feel lighter. There's a disconnect between Wall Street's party and Main Street's pain. Earlier this year, the market plunged 20% in 6 weeks. That kind of volatility leaves scars. Every new tariff threat or geopolitical flare-up sends shockwaves through the market. This isn't a steady climb, it's a frantic scramble up a mountain, and everyone's worried about the loose rocks underfoot. The fear is real, even as the market soars. Investors remember 2008 and worry about a repeat. So why the long faces? Because the good times can turn sour in a heartbeat. We're breaking it down so you can see the forces at play. Stay tuned, what you don't know can hurt you. Politics is driving the market's every move. President Trump's second term brings unpredictability. Every policy, every tariff threat, every tweet moves the market. The new trade framework with China offers hope, but it's fragile. If talks collapse, expect more volatility. Meanwhile, the Big Beautiful Bill Act adds $2.4 trillion to the national debt, stoking anxiety about the economy's foundation. For those nearing retirement, this is a major source of fear. They can't afford another hit to their savings. Economic anxiety is changing behavior. Nearly half of consumers are scrapping travel plans, switching to generics, and slashing non-essential spending. This isn't confidence. It's bracing for impact. When consumers cut back, the ripple slows the whole economy, no matter what the stock market says. The good news? Inflation is contained for now, and the market loves it. Even with new tariffs, prices haven't spiked, yet. If inflation jumps, the Fed will raise rates, and that's a proven market killer. For now, we're walking a tightrope, with politics and economics blowing hard. Investors are watching every move. In this market, you can't just buy the index and relax, you have to pick your spots. Oracle soared 13% on booming cloud revenue, showing the power of innovation. But Boeing plunged after a tragic crash, and GameStop tanked 22% on weak sales and a big note offering. Fundamentals matter. Passion alone won't save you. The tech sector, especially AI, is still hot. Nvidia, Broadcom, and Microsoft are climbing, but even here cracks show. AMD slipped despite big news, and Tesla's drama drags it down. Even the strongest sectors have risks. Where's the smart money hiding? Gold and Bitcoin. Gold hit $3,400 an ounce, now a mainstream safe haven. Bitcoin touched a record $112,000 before pulling back. Both assets racing to new highs tells you everything. Investors are hedging their bets. They're buying insurance against uncertainty. In this market, you need to know where the landmines are. Pick wisely and protect your wealth. Is a crash coming in 2025? No one knows for sure. The market is volatile, risks are high, but panic hasn't set in yet. We're in a tug-of-war between bullish fundamentals and bearish anxieties. This could be a prelude to a crash or just a healthy correction. Markets don't go up forever. A pullback can reset the stage for the next rally. Record stock buybacks, $750 billion so far, are providing a floor under the market. The battle is between corporate support and public fear. The risks, political turmoil, trade wars, massive debt, are real and growing. One major event could tip the balance. Don't panic. Stay informed, diversify, and keep some cash ready for opportunities. Take control of your knowledge and preparedness. Keep watching, keep learning, and be ready for anything. There's always a bull market somewhere.